So Tego, real estate investing. So you did an amazing class this week and you trained on...
Did y'all hear that? She said I did an amazing. Did you say I was amazing or did you just said I did an amazing? Hold on. I got to make sure I got that right. I'm just kidding. Go ahead,
so
please.
you taught a class on real estate investing this week to realtors.
Yep.
And it was really great because you talked to them about why they should also be investing, right? Because we talk about being a resource for our community as far as, helping people find investment properties, but just kind of went through some things that I thought were really good bullet points and hoping you could recap those.
Yeah. The thing is when people hear real estate investing, I think maybe at a high level, all they think about are the late night TV ads that say get rich flipping houses, right? When they
or buy houses with no money down.
No money down, right? They think about all these air quote. I use that term too much. Air quote. That the kind of the get rich, make lots of money, quit your job, educational programs that are out there to teach people how to invest in real estate, right?
Yep.
Why are you laughing?
Education.
Yeah. So I mean, basically, what they're selling is a $3,000, $4,000, $5,000 class on how to buy and buy homes cheap and flip houses, right? So there's a lot of that out there.
So when you think about investing, people think of flipping,
right, or
investing.
Well, it kind of breaks down into two very broad categories, and understand within these two categories, there's a lot of subsets as well. So you've got the now investing and the tomorrow investing. And so when we're thinking about now investing in real estate, that's the flipper. That's the person that buys a distressed property, goes in there, cleans it up, makes it beautiful, resells it, and makes a profit.
Makes a profit. Now investing.
So that's now investing, right? That's like a job, right?
That's like regular, money for now.
That's regular income. Yes, that's money for now. The other type of investing, which is much larger, and Eddie knows this world really well because he was in the commercial world, was basically the hold investor, which is more of a you own it, you rent it, you collect rent over time, but there's a bunch of other advantages which I'm going to go into here in a second. So it's the tomorrow to a certain extent. It's not like you're just making the money now. It's you're investing in the property, and you're getting cash flow, and you're getting a few other benefits over time, and it's more of a long-term investment.
So what are some of the ways that you make money over time with a long-term investment?
Yeah, when you look at long-term real estate investing, it basically falls into there's four what we call wealth generators. So you've got your cash flow. Cash flow is very simple. That's if you own a property, you rent it out, you pay all the bills, you pay your property manager if you're doing that, you pay whatever else you're doing, taxes, insurance, utilities, repairs, and so on, right? Whatever's left over, why do you laugh at me?
That didn't sound like there was going to be anything left over the way you said that.
Well, but
after you pay this and this and this and this, whatever's left over, I'm like, wow, it doesn't sound like anything would be, but there is.
That's a really good point.
Usually.
No, and that's why you can't just think, oh, it's rent minus my mortgage payment. No, you got to think about all that other stuff too. Yeah. So, but cash flow is okay. What's left over at the end of the month after you've paid all those things, right? So that's cash flow. That's one way you're generating income from a real estate investment. And that to a certain extent is now money. You're getting that in your pocket, in your bank every month, and that would fall right to a P&L, your bottom line of your P&L on your business statement. Well, you've got three other things that are definitely more of a long-term.
Long play.
So one of them is price appreciation. Over time, no matter what happens, over time, historically, home prices on real estate go up. It goes up on houses, it goes up on multi-unit, it goes up on commercial. It just does. And even if you bought a home in 2007, at the height of the market, eventually that home would have, even though it fell,
it recovered
20 or 30%, it recovered, right? So that's one way. So you get appreciation over time. The third one is your loan gets paid off over time, right?
Assuming you have a loan, yeah.
Assuming you have a mortgage.
Right. You're paying it down.
Yep. You're paying it down over time, or even better, your tenant is paying it down over time.
Right.
You're not paying it down, right? So again, that's just banking money every month, right? It's kind of like what we talk about when we're talking about why you should buy a home. Is every month you're paying down your loan payment, which is forced savings, right?
Right.
And then the fourth one, and this, we could talk about this one for hours and hours and hours and still scratch the surface.
You could. I couldn't talk about it for hours and hours and hours.
And that's tax savings. There's a great book that I just finished reading. It's called Tax-Free Wealth. It's part of the Robert Kiyosaki series of books. It's written by
the Rich Dad Poor Dad.
Rich Dad Poor Dad guy. But it's called Tax-Free Wealth. And the one big takeaway for me on that one was the U.S. tax code, which is crazy long, right? There's not a whole lot in it. This is what he said. There's not a whole lot in the tax code about collecting taxes, but there's a whole lot in it about how to save on taxes, or certain things and behaviors that you can do that save you on taxes. And one of those things is buying real estate.
Right. And what's interesting about that is people call those things loopholes, but it's the tax code designed to incentivize certain behaviors, and they want people to buy properties, right? They need rental properties for our economy and all the different benefits that come with it.
Yeah, I mean, we are in a housing crisis in this country right now. It's a different kind of housing crisis than we had in, let's say, 2008, in 2009, when everybody was going through foreclosure. We have a housing shortage crisis right now.
Right.
We have, just like I was talking about earlier, we have, more families, more people wanting homes, more people starting families. We have this huge millennial boom population of people that want homes. And there's just not enough. There just hasn't been enough built over the last 13 years. So anyway, back to the whole, again, the four wealth generators of hold real estate investing. Just to summarize it again real quick, it's the cash flow. It's the monthly money you got left over. It's the price appreciation of the property. It's the loan payment or the loan buy down if you do have a loan. And then the last one is the tax savings. And I will just want to say something about the loan. I'm a huge proponent, and I think most people that have spent a lot of time researching and understanding real estate investing, getting a loan on the property. I know, what's his name?
Dave Ramsey.
Dave Ramsey's not going to like this, but loan leveraging against a property, getting a loan from a bank, especially when we're talking 3.5% mortgages, has some huge advantages. I mean, again, we don't have time to go into it now, but it's something to think about.
So what you're saying is you're a big fan of other people's money.
OPM.
OPM, other people's money. So
I'm sure Eddie likes OPM too.
Yeah.
But the real estate leverage type of OPM.
Right, exactly.